could be just me, but it is odd when a company announces that it is making a bid on another company when that bid price is still well south of where the price of the offering is in the time being. Then it could be portending another failed big business deal like some of those we just outlined. Is that what's happening here? Just to let you know, Time Warner price trading still about $20 short of the $107.50 a share offer that AT&T has outlined. Now, keep in mind, it has run up prohibitively since we first got wind of this. But things could fall apart. Jonathan Hoenig on that. Jonathan, what do you think?
Thanks for having me with you, Neil. It's so frustrating because when these big deals get announced and everyone's first reaction is government going to let this deal go through? And it's outrageous in a capitalist economy, Neil. Do we exist by right or we exist by permission? And what you have here is simply two companies, shareholders, engaging in voluntary trade. Why we should have to wait around and, in fact, speculate on government approval is tremendously destructive to the economy and to companies who are just trying to become more competitive and make more money.
All right, but we were showing, as you're speaking, it's kind of hard to read unless we show it full screen, guys, some of the more noteworthy failed deals here. And then they all failed for a variety of reasons, usually coming back down to the government thinking they would corner a market. In this case, it's a market in technology, in the media, that is constantly evolving and changing. So I think
that's just it, Neil. Yeah, that's it. There's no monopolies in a free market. AT&T is in competition with everyone, Neil, Viacom and Netflix and YouTube and Twitter and Periscope and anyone else out there battling in a free market for eyeballs and for the attention of millions and millions of viewers. And what you always see in these antitrust cases, Neil, is that, in fact, quality is going up and price is going down for the consumer in these markets. This was the same thing going back to 1911. The government filed an antitrust case against Standard Oil. The price of oil had been going down. We're seeing the same thing in the media right now. The government's worried about a monopoly in media. There's more media than ever at a lower price than ever. And this is why this is tremendously destructive, Neil, not only to the companies and shareholders, but literally to the little guy. The little guy the government wants to protect has never had it so good on the media landscape. And interventions like this make it much more difficult to make money and to please exactly that customer.
Some of them go back at you by saying, Jonathan forgets that if these mergers had been allowed in the past, they might have been able to thwart these innovative technologies. So by our stopping them, we succeeded at doing that. You say what?
Well, just look at, just look back to the early 2000s, Neil. United Airlines wanted to merge with U.S. Airways to become more competitive. The government clamped down on that. What ended up happening was that American Airlines was allowed to buy the company just 5 years later. So when the government starts to step in and say, this is how free people should act, how do they know? And in fact, once again, even with airlines, we've seen prices go down steadily over that period of time. So just a question of trade or force. And if you're on the side of freedom and trade, you should think, as I do, that these types of antitrust laws are completely debilitative to the economy. And interestingly, Neil, I really say neither party, the Democrats or the Republicans, want to come out against anti-trade laws. Even those who talk about getting rid of regulations, they all love antitrust. And that's really the ultimate check on American individuals, because it says anytime you want to make a trade, government's going to come in and either give its approval or deny your right.
And all the more interesting when both parties are raising hackles about this one. Jonathan, thank you very much. Jonathan Hoenig.
Thank you, Neil. Be well.